Hello and welcome to Business Daily on Trust Television, and this is the midweek edition of the program, and we are set to bring you developments in the world of business and the Nigerian economy. I am Christiana Amodu Otinya. Thank you for joining on the program. First, we'll kickstart with the headlines. Diesel rises by 184%, defies global oil price. Now, in terms of IGR, internally generated revenue, the FIRS shatters 2021 record, collects 10.1 trillion naira in the year 2022. We'll bring you more updates in the business roundup segment of the program. We'll take a short break. When we come back, time to take a look at the numbers. Please stay with us. Welcome back. Now let's get straight into the stock market segment of the program. We'll begin from the local buzz in Nigeria. Now we've seen the Nigerian exchange weaken by 0.09% due to profit taken by investors after the CBN announced the 100 basis point increase for the monetary policy rates to 17.5% at the end of its monetary policy meeting, the first MPC meeting for the year 2023. The all-share index settled at 52,612.55. Now on the activity chart, a total volume of 182.4 million shares valued at 4.8 billion naira change hands in 3,470 deals. The market cap settled at 28.65 trillion naira. Now going to other markets in South Africa, the Johannesburg exchange is opened positive 0.44% higher, 80,387. However, for Ghana, the sentiment is in the negative, down 0.11%, 2,432. Going now to Wall Street in the United States, let's see what's happening there. So it's a mixed bag in Wall Street. Dow Jones Industrial Average is up 0.31%. The S&P 500 climbs 0.05%, and the tech-heavy Nasdaq Composite is in the negative, down 0.27%, 11,334.27. Now, in the European Strait, European markets opened fractionally lower Wednesday following a loss in the previous session, despite data out of the Eurozone showing an uptick in business activity. Talking about the Eurozone flash PMI. So it's high for the FTSE 100 in the UK, 0.19% higher. The CAC 0.22% higher, and the DAX in Germany, 0.10% higher. They're 15,108.58. In Asia, Asia Pacific shares traded mostly mixed, taking a lead from Wall Street's struggle for direction as China and Hong Kong markets remain closed for the Lunar New Year. The Nikkei 225 in Japan is up 0.35% at 27,395. Now going over to the commodities trade, we'll begin from the oil market. Brent crude is up 0.24%, $85.92 per barrel. Now, crude oil prices rebounded Wednesday as demand recovery hopes in the top importer China following its exit from COVID-19 pandemic curbs provided some sort of support after prices dropped in the previous session on concerns about the global economic growth. For the bullion, talking about the yellow metal gold prices also stay in the positive, 0.39% there, higher, 1,938 per ounce. Now the prices are staying away from taking the big bets ahead of the U.S. economic growth data this week, while expectations of slower interest rate hikes from the Federal Reserve kept the bullion's outlook bright. Now, the whatever happens with the central banks, especially with decisions from the central bank, finds its way back into the stock market. Now, we saw decisions from the Nigerian MPC coming this week. Decisions is also expected from the Reserve Bank of South Africa. That announcement is expected on Thursday. So these decisions, when they come in, it has a way of pushing sentiments in the stock market because it gives more of an outlook what to expect for the economy. And remember, on the one hand, issues around fears of a global recession is also coming into play. Inflation is also cooling down in different parts of the world. For agro commodities, palm oil is in the red, down 3.44% at $3,758. Wheat is doing $743.22, and cocoa $2,508 $85 in the negative, down 0.88% from this chart right here. Over now to the cryptocurrency market. Keeping a watch on cryptocurrencies, Bitcoin, I beg your pardon, 22,700. That's for the largest digital token in the world. It's up 0.89%. Ethereum is at $1,552.45, shedding 2.85%. And for the Binance coin, $302.04 is up 2%. So we are seeing that the only red here is coming from Ethereum. Remember, the crypto market has also received its fair share of beating from the collapse of the FTX exchange. The market is only beginning to enter back into bullish territory recently. We saw a sea of red across all major cryptocurrencies after that announcement of the collapse of FTX exchange. Those are the numbers we have for you on the program today. Remember, we always bring the numbers to you. We crunch it and also try to put some perspective to these numbers and news that affect the stock market. Now, let's bring to you a roundup of business stories. Take a listen.
The market price of diesel in Nigeria surged by 184% from January to December 2022, despite the fall in global crude oil prices towards the end of last year, with Brent crude averaging $80 per barrel. According to the National Bureau of Statistics, the average retail price of automotive gas oil, also called diesel, paid by consumers rose from 288 naira in January to 818 naira in December. On a month-on-month basis, it increased by 1.11% from 809 naira in November. As cost of diesel is not regulated by the government, marketers use it as an advantage to generate profit for themselves, according to experts. Brent crude, the international oil benchmark, has declined by 34% from a high of $122 per barrel when the Russian-Ukraine war intensified. In December, Brent averaged $80.92, the lowest last year. Nigeria's Federal Inland Revenue Service, FIRS, has announced that it collected 10.1 trillion naira in tax revenues in 2022, the highest tax revenue in its history. A statement from the FIRS disclosed that the service earned 4.09 trillion naira in oil revenues, representing 41%, and 5.96 trillion naira in non-oil revenues, representing 59%. This is against a target of 10.44 trillion naira set for that year. The statement further explained that companies' income tax contributed 2.83 trillion naira, valued added tax 2.51 trillion naira, electronic money transfer levy 125.65 billion naira, and earmarked taxes 353.69 billion naira. According to the executive chairman of the FIRS, Mohammed Nami, this was made possible through dogged implementation of strategic reforms over the past 2 years, a renewed commitment by officers of the service, accompanied with a boosted morale, as well as the innovative deployment of technology for automation of both tax administration and operational processes.
There you have it, a roundup of business stories. Our focus on the program today would be from the decision and news that have come out from the first MPC meeting of the year. Of course, the governor of the Central Bank of Nigeria, Godwin Emefiele, he was speaking to issues around also the deadline of the old notes. And the CBN is saying there is no going back for the January 31 deadline. I'm being joined on the program by two gentlemen. Steve Nwachukwu, he is an economist. He is in the studio here with me. We'll be hearing their thoughts. And Paul Alaje, the lead economist at SPM Professionals. They are both joining me to look at this decision and also put perspective to these issues. Now, I want to begin with Steve Nwachukwu. I will just quickly ask you, did you expect a raise or the CBN was going to hold?
Of course, yes. Most of us expected a rise. But not to the tone of 100 basis points, somewhere within 75 maximum to 50 basis points. But they actually took that position of taking 100% basis points. And what this actually means is that they are trying to fight inflation with the rising of this very interest rate so that it will be difficult for businesses to access funds, or when you are also for actually to cut down inflation rate. But the question has been CBN, since after they have done this in 5 consecutive meetings, they have raised this interest rate from somewhere around 11.5% to about 16.5% last year, and now they started the first meeting of the year with a 100 basis point. The question has been, have you been able to cut the interest or to cut the inflation rate that you actually plan to tackle? The answer remains no.
Okay,
These measures have not actually tackle the issues they intend to tackle.
I'll hold you on that thought on whether the tightening is yielding fruits. We'll take a short break. When we come back, we'll get more in the conversation. Stay with us.
Now, as part of efforts to support Africa's goal of strengthening...
Now, looking at the activity chart, as you can see right here, a total volume of 130.
Created a Boko Haram crisis that at that time was restricted to Yobe.
How secure are they? You can see security men with blood.
This is the road leading up to the...
Really, if you look at England squad, you are looking at EPL, you are looking at their names. You are not looking at...
Welcome back. In case you're just joining us, this is still Business Daily coming to you live from Trust Television. Our focus on the program today is on the Monetary Policy Committee meeting, the first meeting for the year 2023, and the decisions that have come out from the MPC meeting. Before we continue the conversation, let's take this report.
The first MPC meeting for 2023 had been highly anticipated, as many have been curious to see what move the CBN's MPC will make. Governor of the Apex Bank insists deadline for the withdrawal of old 1,500 and 200 Naira notes from circulation remains, despite calls from different quarters requesting for an extension.
I must say here that unfortunately, I don't have good news for those who feel that we should shift the deadline. My apologies. The reason is because, just like the president had said on more than 2 occasions, and even to people privately, that for us, 90 days, in fact, we feel it's 100 days is enough for anybody who has money or the old currency to deposit it, the money in the banks. And we took every measure to ensure that all the banks were open or remain still open to receive all old currencies.
The NPC meeting announced that the benchmark interest rate will be hiked by 100 basis points, taking it from 16.5% to 17.5%. CBN governor explains that the decision is in a bid to aggressively fight inflation. The decision to hike the interest rate comes despite a slight decrease in inflationary pressures, which he says is not enough to celebrate.
The economy remained confronted with the risk of high inflation, with adverse consequences on the general standard of living. The committee therefore decided to sustain the current stance of policy at this point in time to further rein in inflation aggressively. In summary, MPC voted to 1, raise MPR to 17.5%, 2, retain the asymmetric corridor at plus 100 and minus 700 basis points around the corridor, and 3, retain the CRR at 2.5%, and 4, retain the liquidity ratio at 30%.
Several experts, as well as international financial institutions, have warned against developing nations using monetary tightenings to fight inflation, as it may further complicate life for its citizens.
There you have it, the CBN governor there speaking, saying he does not have good news as it relates to the deadline for the old Naira notes. I want to speak to Paul Alaje now. The CBN governor, when speaking, he did say that, of course, inflation is easing. And in the words of the managing director of the IMF, Kristalina Georgieva, she said it's not time for central banks to take their feet off the throttle yet, especially as it relates to interest rates. What are your thoughts? Did you expect 100 basis points increase? Okay, Paul is still trying to join us. Let me come back to Steve with me here in the studio. You said that the 100 basis point increase might not be what we expected, especially for the interest rate. But let's look at the impact. How do you expect this to impact businesses, manufacturers, and the private sector?
I think in the words of the central bank governor, Godwin Emefiele, that there are consequences of these very policies, rising inflation rates to the standard of living of Nigeria is my concern. And that's also should be the concern of the policymaker, both on the side of the monetary and the side of fiscal, so that they push out policies that actually alleviate the sufferings of Nigeria. When you have a double-digit inflation rate over 21%, and you're having an interest rate over same double digit of 17.5% as we're having, what it means that is going to actually cost more to get financial facilities from the commercial bank, both the conventional and unconventional mix. So it's going to raise costs. And when cost is raised, cost of production is also going to raise. The same inflation you think you're fighting will still, all the manufacturer will still put the cost of finance to their production. And it boils down to you and I who goes to the market to buy these very commodities. So the aim is already defeated. What rather CBN and the fiscal policy maker should be doing is to marshal out plans that will help in most of these very factors, or these very food factors of food commodities, or basket of them that needed to reduce those prices, and you will find that the inflation on its own naturally will start coming down.
I'm being told that Paul Alaje, the senior economist at SPM Professionals, is with us now. He's joining us virtually from Lagos. I was asking you just before we lost you there on your thoughts if you expected a 100 basis point increase. Steve in the studio here is saying that the tightening is not really yielding the necessary results. Let's hear your thoughts. Okay, Paul, if you can, I don't know if you can hear me. Let me come back to Steve Nwachukwu now in the studio. We're having a conversation before we started, and we spoke about the issue around, currently we're at 17.5% for the MPR. The CBN left other parameters unchanged. And you were talking about the issue around, is there a possibility that the mark of 20% will be hit?
Yeah, I think that would be my fear. It's too, but from the posture,
I think
Paul
is joining us. Let's just, Paul Alaje, if you can hear me, let's have your thoughts. Let's have your thoughts on the raise by the Central Bank of Nigeria. Steve, I think you have to continue when we have the
like I said,
issues.
I think my fears and the fears of the likes of Paul and the rest is that from the look and the posture of the Central Bank of Governor and the rest of the MPC members, it seems like they are going further. They may hit 19%, they may hit 20%, but if they get to that psychological point of 20%, that will be very...
We can see Paul now. Paul, let's have your thoughts. Stephen Nwachukwu here has been speaking so much around what we have seen from the CBN. Let's have your thoughts on the 100 basis points raise.
When you look at the economy, first of all, thank you so very much for having me. And I also want to say thank you to a co-panelist for being on the show. So when you look at what the National Bureau of Statistics have reported, inflation seems to have reduced. And I believe that is why many analysts and economists thought maybe central bank will hold rate. But what we know that central bank should never do now is to reduce rates. Now, why have I supported non-reduction or not holding rates? If you check what inflation was on month-on-month basis, it is easy to look at annual basis, but on month-on-month basis, inflation actually increased. That is, when you compare what happened in November to December, it increased. And we cannot determine whether this point was the deflection point or it was just an outlier of some sort. So it will be too early for central bank to or the MPC to say that because we have seen a marginal reduction in inflation, therefore we have started to see some level of improvement. The fear here is that there are queues all over Nigeria, even though government say you should buy fuel at 179, 180, 189, as the case may be. I believe your guest in the studio will tell how much he bought fuel last in his trunk or in his vehicle, and also as a presenter, how much you are buying fuel. You know, if you want to buy it with ease, except and unless you will not mind spending as much as 2 hours to 8 hours in traffic, on queue. So in the real sense, inflation, we should brace up and we should find our belts to be tight, because I can tell you, I'm not seeing a reduction in sight. One, because of external factor. Putin continues to occupy Ukraine. Because of the policy yesterday, you saw what happened to exchange rates on our window today. We still have a very long way to go. Davos have also revealed that recession seems to be inevitable for some parts of the world, even though their projection and Nigeria may have positive growth. But when you compare that to what the report of National Population Census will be in March, we can only hope that population growth will be below the said growth that we're expecting, the report that we show. But by and large, I will tell you, increasing that rate seems to be inevitable, even though you see that ways and means federal government will be owing approximately 5 trillion naira. You know why? Because ways and means that government have today over 23 trillion. When you calculate 20.5%, because the cost of ways and means is NPR plus 3%, 17.5 plus 3% is 20.5. Which means even if President Buhari or whosoever takes over from him do not borrow extra money, Nigeria by the end of the year we owe 5 trillion naira minimum. That is the danger of increasing rate. If you reduce rate, you have danger of inflation. If you hold rate, you have danger of confusion.
Paul Alaje, everywhere is striking danger from your analysis that we have seen now. Everywhere is a dangerous point for the economic managers. Another big news from the MPC was the issue around the deadline. And Stephen, I want you to speak on the deadline, January 31 deadline for the old note, and I would want Paul to also share his thoughts.
Okay, before I share my thought on the 31st January deadline, and let me also an advice to the federal government, and let's shift from looking from solving most of this economic issue from the central bank or the monetary. Let's dedicate some very dedicated and very well-channeled policies from the fiscal side, because most of these very inflationary factors are structural based. They are supply based. Scarcity of dollar, non-supply of petroleum products to Nigeria. These are the real factors that are rising this with inflation. Farmer headers clashing, unavailability of these very cropping materials and the rest to the farmer. These are the major issues. Each federal government should look away from the Central Bank of Nigeria, looking at a savior from the policy of MPC meeting. No. Take a physical decisions that will actually help. Then on the issue of the 31st January, from the look of things, it's not visible because there is still very much scarcity of these very new notes around Nigeria. I don't know who is holding it. CBN should need to come out. They are the one printed it. They are the one that disbursed it to the bank. They should be doing hourly, daily checks on the bank to make sure these very Naira notes are available to Nigeria. Otherwise, as it stands now, it will be a total policy somersault for CBN to stick to that 31st January. What they should stick, or what they should be rather doing now, is to be moving from one ATM to other, from one bank, from one town to other, making sure that this very new note is available. Let's leave the rhetoric of the politician holding it and all that.
Okay.
Please make this note available to Nigerians.
Let me quickly get the thoughts of Paul Alaje. Just time is never our friend, but let's get your thoughts on the January 31 deadline.
In the last 2 weeks, I've been in 5 states, Lagos State, and I can tell you, based on organization survey, approximately 50% or more of the transactions are still done in old currency. Yesterday and 2 days ago, I was in Port Harcourt. All transactions that we directly participated in were done in old currency. Last week, ancient city of Ibadan and Kano, all transactions that we participated in were purely on old currency. Therefore, when central bank says that 31st in the next 6 days will be the round-up date, obviously it is not feasible. My advice to federal government and Central Bank of Nigeria very quickly: extend the day, but let the day be before the general election. And when you extend, there are things you must do. First, make sure that you have more agents that we go not just to the ATM. The rural people don't have ATM machine. In places where people are desperate, there are no ATM machine. Where people get grains, there are no ATM machines. But as they want to do population census, people will get to virtually all the houses that are available in Nigeria. Get agents, pay them to help you go to different homes, to different places, so that there will be no excuse that people have access to the old notes, but they don't have access to the new notes. But who will pay for the cost of exchange by transporting them from one place to another? These are things that central bank should have factored in, so that you can rake in all the old notes and put new notes in the hand of people. Personally, and I tell you no lie, I've never seen the 200 naira before. I've never seen the 500 naira note before. The new ones, what I've seen is only the 1,000 naira note. So if I stay here in Abuja and I've not seen those new notes, imagine somewhere living in Akampa, somewhere in Cross River, in Arkila, somewhere in Sokoto, or in Olu, in the southeast. How do they have access to this note? A big question that we hope central bank authorities will answer very quickly.
Thank you so much, Paul Alaje, lead economist, SPM professionals. Thank you for joining us to share your perspective. In the studio with me, Steve Wachuku, a foremost economist and a friend of the program. Thank you always for giving us time to come to speak to issues around the economy. Thank you, gentlemen.
My pleasure.
And that's where we call it a wrap on the program today. Thank you also for investing your time with us on the program. I trust today's program has been insightful. Don't forget you can catch up on all updates on our social media platforms, on Facebook, on Instagram, on YouTube. You do not want to miss out on major updates. Go to YouTube, click on the subscribe button, and you will not miss out on the information as they break. I am Christiana Amodu Otinya. Thank you and continue to stay safe. Bye for now.